Hi. Things are moving fast, so I'm going to try to get to a lot of material. It may change over the next 15 minutes as I get this out, but I wanted to get everybody an update on what's happening. It's Friday AM, and this week has been one for the record books. There's a lot going on, and I'm going to try to cover it quickly on some of the more important developments for the economy and the pandemic. Most importantly, I want to get you some context on why the financial markets are changing and perhaps stabilizing here. We'll approach this from the way Dr. Robert Shiller would. What is the story that the world is telling themselves about the pandemic? Okay, as Guy Rizdal would say on Marketplace, let's first get to the numbers. As of 9:45 this AM, there's 163 countries with the virus with over 10,000 deaths and 86,000 recovers. Italy has surpassed China for the largest number of deaths at 3.4 thousand or 3,400 with 41,000 total confirmed infections. That's in Italy alone, right? That's about half of what China has. In the U.S., there are 14,250 infections with about 205 deaths. And remember, I warned about a surge in the number of infections this week as more testing kits were being distributed. Now, my over-under for this week on Friday was 20,000, and we're well below it for now. But more on this later in the markets. All right, so what's happening? There are a lot of moving parts over the last 24 hours that's seen California's governor declare a statewide shelter in place, and the U.S. Senate moving at really lightning speed for them to deliver a massive spending bill and tax rebate bill. Okay, so the call by California Governor Bill Newsom comes after he received estimates of 56% of the 40 million citizens in his state that may contract the coronavirus over the next 8 weeks. At the minimum, this would require an additional 20,000 beds for the state. Now, New York Governor Cuomo just asked New Yorkers to do the same. And PA Governor Tom Wolf ordered all non-sustaining businesses to shut down in his state or risk enforcement from the state police. That's pretty extreme. And these come after actions taken by other states to close bars and restaurants, including Illinois. Now, to economically counteract this, the Senate moved at lightning speed to create the Coronavirus Aid, Relief, and Economic Security Act, or Kerrs Act, Thursday night. Now, there are four major parts to this thing, and I'm going to run through them as quickly as I can. First, their first section is a rebate section based on 2018 income that sends a $1,200 check to individuals and $2,400 for couples, with a $500 check per qualified child. Now, these rebates phase out after $75,000 per individual up to about $99,000, and then they go away. And for $150,000 per couple, and I think they phase out at $300,000 or $299,000. Okay, second, there is $300 billion coming for small business loans from traditional lenders that will be federally guaranteed and may convert to grants if they are spent on rent, mortgage, and payroll. The third section of this thing is there is $250 billion for loans and guarantees for distressed industries, with $50 billion set aside for airlines and $8 billion set aside for cargo carriers. For those in the sports and entertainment, casino gambling, hotels, public transportation, and restaurants, this should help. But don't expect the NBA, Major League Baseball, NFL, or any of the major sports to go live anytime soon. All right, fourth, the healthcare section. It's going to provide a big support for a wide range of areas, including supply chain improvements, coverage of testing, and telehealth. Now, the total spend for all of this should be north of $1 trillion. And again, they have to work with the House to come up with something that they can compromise on. So lastly, just one of the latest moving parts is we just had U.S. Treasury Secretary Mnuchin state that the IRS payments due date has been now extended for 2019 out to July 15th. Okay, so we're in 2020 now, but for last year, this is going out to 2019. Going out to July 15th. All of this is really good news for the economy and for the U.S. citizens. Now, That's not the only thing that's happening, of course. There's numerous central banks acting around the world to aid their economies from the wrath of this virus. And I'll stay focused on the US, with the Federal Reserve restarting many of the 2008 financial crisis programs to ensure that the capital markets remain functioning. As an example of one of the programs, the Fed is acting as a backstop now for commercial paper. And this has been a key step to calm markets when many of the credit spreads on energy and transportation related commercial paper and debt exploding higher against treasuries, meaning people are trying to sell them and buy treasuries, right? Now, they've also done this, the Fed has done this for mutual funds, money market mutual funds, and that's good news. That just came out today. Also, the Fed established currency swap lines with 9 other central banks to help ease the global demand for the US dollar. And finally, the Fed announced today that they're expanding their QE to municipal bonds, something Illinois and California will love. Now, these are just some of the activities that the Fed is engaged in to provide liquidity to the financial system during a time of severe stress. And I will say it's starting to work. Now, getting back to Dr. Schiller, I spent a lot of my time monitoring the economy and the markets for the big stories that are driving them. And yes, stories. And I put out a research paper back in March of 2019 to explain how I took Schiller's narrative economics theory and added to it. So what I see today is that the old narrative of the Fed being the biggest influence on the markets has temporarily been pushed aside as the markets keep repeating that the Fed can't solve a pandemic. Now, this change in narrative or story has led to a massive increase in uncertainty as the market searches for its next driver. So what is this like? I mean, it's the equivalent of people being told they will be quarantined in their homes for 2 weeks and everybody running out and trying to buy toilet paper. Yes, it's just like that. Except in this case, the toilet paper is US Treasuries, or what is perceived as the safest investment. Now, this is the panic that has ensued. The markets fell dramatically and have experienced unprecedented volatility as they are attempting to find a new narrative to drive market value. So where do we go from here? All right, at this point, we're finally seeing the markets begin to stabilize with less day-to-day volatility. So why did this happen? As I said, the market's been trying to process what will happen with the pandemic and figure out what the next narrative is for the world. Now, the process of this is uglier than me trying to rap an MOP song. However, something has changed. And I pointed out this on Wednesday and how really some big names in finance came out with dire predictions for the economy and the markets. I mean, we're talking about Bill Ackman, Ray Dalio, Gary Cohn, all had media play, and the markets dove to new lows for the day. I want to add that a lot of the big major financial institutions also came out with dire predictions for what the economy is going to do in the second quarter and maybe actually into the third quarter, with so many of them calling for a recession. But you know what's interesting? The markets dove, but they didn't stay there. And they pulled back half of their losses by the end of the day. Now, this movement really is something I always looked for as a currency trader to tell me we were nearing an inflection point of market sentiment. It's where you get a lot of news and data all pointing in the same direction of the current trend or narrative, but then you don't get the same movement in that direction. Does that make sense? Like everything, this big story that's driving momentum, driving everything forward, and you get a story that really should drive it forward more, but then it doesn't really have the same impact. This has occurred. And while you'll hear the Trump administration and WHO all discuss bending the infection curve to make it lower, right? They're trying to bend this thing down from having a massive spike. What they're also doing is attempting to change the market narrative from extraordinarily dire to somewhat positive. Now, look, I can't look you in the eye and say this is the end of it, but I will say this. This is the beginning of the process to change the narrative and provide some positive feedback and give everyone what we hope for is hope that we can overcome this pandemic. And that's great news. All right, at this point, the best we can hope for is this, and we should be hopeful that better times are ahead. Now, that's not great news for everybody who's in a hospital or suffering from the coronavirus or whatever you want to call it. But this is really good news overall, and that's what I want to emphasize here. There's going to be additional deaths. There's going to be additional infections. But what I want to say from an economic and market standpoint, and that's what I'm preaching here to you today, things appear to be in the beginning process of changing, and that's really good news. All right, that's where we stand today. I'm Andy Busch, market expert and economist. And you can get all of my research at andrewbusch.com, and you can check out all of these videos on my YouTube channel. And I hope that's been helpful. If you found this helpful, just please leave a review on YouTube and tell other people, share this with them, and hopefully this is going to help them.